The Real Estate and Mortgage Show, your go-to spot for everything home buying, selling, and financing on News Talk 580 CFRA.
Welcome back to the show, everybody. So, as I mentioned off the top, we got a ton of listener questions submitted in at realestateandmortgageshow.com this week. So we're gonna get to those now. So, first question comes from Michelle, and she has a question about the HST rebate, which we were talking a little bit about in the first segment. She says, my daughter bought her first home, a new build with Minto, in February 2026 with a closing date of July 27th, 2027. She's entitled to receive the 5% GST rebate of $24,000. What are your thoughts with respect to her going back to the builder and asking them to cancel the original contract and allow her to sign a new contract for the same house after April 1st so she's entitled to the 13% HST rebate as opposed to only receiving the 5%?
Great question. And here's what I'm going to tell you. First of all, that rebate has been tabled. It is not firm. So that 13% is not done yet. So the builders, first of all, there's a fraud component to that, right? Like you're frauding taxes to that. Some builders, I don't know, may do it. I don't know, but it's not going to happen with a lot of builders. I mean, and that's a shame because once that does come in, if you bought a home 2 days before and firmed up on a home 2 days before, technically you're not eligible for that HST rebate. Now, what people don't know about the HST rebate is they believe that it's all done. It's all set in stone. It's been talked about. It's been tabled. But right now, the only thing that is firm with Bill C-4 is the 5% GST rebate.
The federal component of it.
The federal component is firm. You're getting that as a first-time home buyer on new builds.
Right.
The other 8% that we're hoping the provincial government is jumping on board, it will get done. I don't know where the delay is, why it hasn't been done yet. There's nothing concrete on it yet. It's tabled, but I don't believe they sit this week, so we're looking next week now, right? So that is not firm yet. People think it's firm. I've had so many people reaching out saying, oh my God, I'm going to get 13%. No, you're not. It's not firm
not yet.
It's going to happen. And then, of course, Ford and Carney came out and proposed that 13% rebate on new builds for all buyers. Once again, it's tabled. It's not firm yet. So It's not happening yet. And that one is starting April 1st until March 31st of 2027. You have to have an agreement in place during that time. It doesn't have to be billed during that time. You have to have an agreement in place.
There's completion dates that are written into it, right?
Yes, there is completion dates. Now, as Frank and I alluded to earlier, there's so much gray area. The realtors don't even 100% know. The mortgage brokers don't even 100% know. The real estate lawyers don't even 100% know, and neither do the accountants. So I know it's a gray area. We've been talked about it. It's hard for me to come out and say this is happening. I know it's all going to get passed, but it hasn't been passed yet. All I know is the 5% federal component GST has been passed for first-time home buyers on new builds.
So, Paul, how do you feel about, in general, especially the bigger builders? I mean, she mentioned one of them here. Specifically, will they be receptive to going back and redoing contracts?
I believe they probably will. My question would be, is that not fraudulent? Like, would CRA not look at that as fraudulent maybe not on the builder's behalf, but maybe on the consumer's behalf? I don't know. Yeah. There's another gray area, right?
Many unknowns.
There's so many unknowns. I mean, because right now you have an agreement in place and then you go rip that up and put a new agreement in place to save more money from the government. I don't know. Is that fraudulent? I don't know. I'm just spitballing here. I'm not saying this is what's going to happen. Yeah. You might get some builders who are good with it, and they will do it. But you never know. They have come out and say if you have an agreement in place and the builder does that, you don't want to get caught. Put it that way. You don't want to get caught. Right. So,
and Frank, you said you had one come through this week where the builder had taken the 13% off, but there was a whole bunch of conditions and asterisks and all that on it. Is that correct?
Well, all they put on there is subject to change, right? I mean, and that's your way out of everything. So
sure.
Right now, as long as it meets legislation and it's passed, again, my sources, at least the lenders I've talked to have said, as far as they're concerned, it's passed. They're still gray as far as, because they haven't seen a lot of purchase agreements as they start to see these purchase agreements. But I was truly impressed with this purchase agreement from one of the builders. Was very, very, very clear. And here's the purchase price of this home. And it was something to the effect of just under $700,000. But the final purchase price, if you qualify for these rebates, was in the low sixes. So therefore, they had already deducted the HST and said, here's your new purchase price if you qualify for these HST rebates. Now, everybody qualifies today, because it's open not only to first-time home buyers but second home buyers. The only ones that don't qualify is if you're buying it as an investment property. That's the gray area for me, because I know that they said they put investment opportunities in there too, but we don't know if somebody's buying an investment property, whether they qualify for it. That's the part we're waiting for.
And Frank, if you go on, so I mean, Glenn from my team, who's a numbers nerd. I mean,
he self-describes himself as that.
he literally scones the government websites, and we can't find anything to say that it has been passed. We know it's going to pass, that it has been passed. So. Who knows? I may be wrong. Maybe there's something in the fine print, but I do believe that it's still tabled and it hasn't been passed yet. But you know what? If I'm wrong, I'm wrong. But I don't believe it has been passed.
So I think
the only reason I think the provincial has passed, though, is because Doug Ford had this elaborate news conference where he actually involved the federal government as well. So to me, if you're going to have that type of a news conference, you do it provincially, that's one thing. But the minute that you incorporate the federal government, to me, that means that they've agreed that this is moving forward.
And it will. And it definitely will move forward. Like it's a lock. It's definitely going to move forward. But even builders, like, I had my weekly meeting with Charles and the teams from Clement Homes, and they're like, there's still a gray area that, like, where's the rebate coming? Are we taking it off the price? Are you going to the government and getting that rebate? What if you've already closed? What if you haven't closed? What if you just bought? What if you have a conditional agreement? Like, there's still so many,
details.
So many details that it's a great program, but we need the details.
So I think the advice maybe for Michelle is, for her daughter, is to hold on.
Maybe talk to the builder. But the one thing I would do,
start talking to the builder.
I would talk to your accountant too. Talk to your accountant and see what their thoughts are on that, and then talk to your real estate lawyer and see what their thoughts are on that. And listen, I think it's probably going to be frowned upon to do that, but I guess we'll see.
Well, we got to know one way or the other.
I'd like to see the government, guys. I'd like to see the government actually be proactive in this and say, listen, if you're closing a home between April 1st, and obviously this is the 1 year if you're a second-time home buyer. It's obviously longer if you're a first-time home buyer. But if you purchased a new build, and I hope that they can go back to March of 2025 and say, listen, if you haven't closed on it yet, you will qualify for this HST. I'd like to see them be proactive instead of forcing the hand of a builder to maybe do something that they shouldn't be doing.
A little shady.
Or penalizing someone because they just happened to buy at the wrong time, and now this promotion goes into effect and they don't get to qualify for it.
Because they signed a contract a week ago?
Or 2 days before,
All right, we had a really, really interesting question and tricky one come in from Robert this week. And Frank, I know you emailed Robert with some advice on this, but I thought it was an interesting question. He said, I've got a colossal problem that I want to help my dad with. He sold a teardown, in quotes, in Scarborough that was vacant and unmaintained since 1987, 50 by 100 foot on a similar road to Baseline. With the help of a lawyer and a real estate agent, he privately mortgaged the property. The buyer took 8 months to come up with a 10% down payment to close at the end of 2024. Since then, there's not been a single payment. It was to be fully paid in 2 years. Everybody got paid, the agent, the lawyer, all that kind of stuff. So now he's asking, like, he got a really good price on it and the market's gone down. What does he do in this situation? Like, will they ever pay? Why did they want to buy it? What does he do if CRA wants their capital gains on the $900,000 that they sold it for versus he feels they can only get $600 for it now?
It's a great question. Number one, I mean, it's really more of a legal question than anything else. He certainly, and I'm sure his lawyers advise them, you need to take legal action sooner rather than later and then deal with the consequences of the taxes afterwards. I mean, there were a lot of red flags on that file right from the beginning. From the email that I saw, there were a whole bunch of red flags to begin with. And, if I was his lawyer, I'd say to him, hey, you're getting good value for this, but I don't like some of the stuff that's in here because it opened up the door for exactly what's happened, which is no payments. The value's gone down. So all of a sudden it's like, hey, I may have lost a little bit of money, but I lose way more if I continue with this. So let them take the property back. And then because it's in a numbered company, are they now not personally responsible for this? So again, there's a bunch of red flags. I honestly think, you need the legal advice right now, and you probably are going to have to sit down with a tax lawyer and or a very good accountant to figure out what the tax implications are once it's settled, once you've either taken the property back or whatever else has happened.
That's like Frank said, that's 100% a lawyer help question.
Oh,
really,
yeah, definitely. I just found it very interesting. And partly what I wanted to touch on, Frank, was what does he mean when he says that they worked with the lawyer to privately mortgage it? What does that mean? I don't know that a lot of people would know what that means.
Well, it's a vendor take back is what they did, is what I took out of that, is where, somebody bought the land, like you said, for $900, and they may have put like 80 or 90,000, and then he took back a mortgage for 800,000, but now the property's gone down in value. It's only 600. So in hindsight, he lost a lot of money by doing that because, they owe 800, but the property's only worth 600. Hence why he's got the problem he has right now, where people have stopped paying because now they're in the hole. So why not just walk away from the initial deposit and then you're stuck with it? And it's disappointing because that shouldn't have happened. But I think I hope his lawyer that represented him gave him the advice that the red flags, the risk at why, if you move forward with this, here's some of the risks that you're going to be looking at.
So not the highest price isn't always the best deal, I guess, is what we're learning from this.
What he's
right?
learning from that, yeah.
Unless the deposit was bigger, right? I mean, if the deposit's 10%, then it's not that great. But if they had put 30 or 40% down, I guarantee you they'd be making the payments and not walking away from it.
100%.
But because the down payment was so low and the value's gone down more than that, that door's been open for them.
Tough situation. Yeah, so I guess the advice to Robert is go to your lawyer, go to your tax accountant,
absolutely,
and get that stuff figured out. That's crazy. All right, so we got another question from Charles. He said he'd sent in a question several months ago about a property that he owns in Vanier. I don't know if you remember the question, Paul, but he'd been talking about redeveloping it, and at the time, you and Frank were both very positive on the redevelopment. So what he's asking, and just to refresh everybody's memory, it's a 1950s duplex. It's generating about $2,750 per month in rent. One of the units is significantly underperforming and would need a full gut renovation. He has about an outstanding mortgage of approximately $247,000. He's considering a tear down and rebuild a 6 to 8 unit residential, and the estimated project costs are $2.4 to $3 million, depending on unit count and design. And based on conservative rent assumptions, the project would likely be close to break even or slightly negative on cash flow in the early years. He's in his early 50s, has a stable career and pension, owns multiple other rental properties. He also owns a mortgage-free primary residence. So his question really is, given the new conditions over the last few months since his original question, including higher material costs, fuel volatility, slower immigration affecting labor availability, etc., does it still look like a strong redevelopment move, or is he better just to renovate the existing duplex, or sell?
Well, so here's the thing. It's a kind of a loaded question, right? Without knowing Robert. But so here's the thing. Ottawa's new zoning laws are allowing properties to go up 3 levels, put multiple units on the property. Depending on the size of your lot, you could put I've heard some people being able to put 8 or 10 on their property with massive lots. Vanier, Alta Vista, those places with those big lots,
right.
You're seeing a lot of people redevelop these teardowns and put up these big buildings. Here's the caution for Robert. His estimate on cost is $2.4 to $3 million. Mm-hmm. That'll always be more. That'll always be more. Yeah. I can tell you that right now because you're going to go.
Wait. You're telling me that new builds always come in on time and on budget?
Right. Yeah. Right. So it's always going to be more, just so you know. So that's going to be your caution there. 2, your market rents. What's going to happen to the rental market? And I do still think it's going to go up and it's going to be strong. But can those rental markets, give you a cash flow? I know he said in the first couple of years he thinks he'll be a little bit cash flow negative, and then he'll pick that up. Fine. But then again, now you have a 6 to 8 unit in Vanier. Maybe you've paid 3. Maybe let's say you've gone a little bit higher and you've paid 3.4. is there an appetite for someone buying a Vanier building at 3.4 unless the numbers make sense? And if the numbers don't make sense, then I wouldn't be doing that build. So you'd have to look at the big picture, look at the numbers, sit down with your accountant, come to an estimate of what the actual costs are going to be, and then elevate that by 10%, maybe 15%.
Give yourself a buffer on that.
Give yourself a buffer, and then you have to decide what the rents are going to be. What are you building? 1, 2, 3 bedrooms. What are the rents for those? What are they going to be? Does those numbers make sense for you long term? And then when you do go to sell it years down the road, is a 6 to 8 unit Vanier building going to be worth what you put into this building?
What's the appreciation?
What's the appreciation on that? And 9 times out of 10, the Vanier market, you're always going to get good cash flow, but your appreciation is going to be very weak in a Vanier market.
Right.
Whereas, you look at something like the Golden Triangle or the Glebe or Westboro, your cash flow is going to be much less, if any, but your appreciation is going to be much larger.
Right.
So it's a loaded question. I'm more than happy to talk to Robert off air to see what his plans are and to see, which way he should go with this. You could be selling it for that future use. The problem is will people see that future use, or will they just see it as a building in Vanier? Or will they see that as I can tear this down. I got deep pockets. I could do 6 to 8 units. Could someone else take on this project for you and you get that cash out of it for you? So, Robert, I'm more than happy to chat with you off the air to see what your end game plan is and then give you the right direction on where I think you should go and help you with some of the costs and help you with some of what the rents would be in that area.
I suppose it would also depend on how long you're going to hold that for.
Exactly,
right?
Yeah. And so it's hard to know, is his best bet to unload this place for future value? Is his best bet to renovate the current place, or is his best bet to rip it down and put up multi-units?
There's still a few details.
There's a few details I need before I can say I would do this.
All right. Have a question, head over to realestateandmortgageshow.com or give us a call at 521-TALK, 521-8255. We'll be right back. Welcome back, everybody. Last segment. The show goes fast, eh?
Yeah.
Oh, hey, Frank, I almost totally forgot, but you've got your reverse mortgage seminar coming up pretty soon, eh?
Yeah, we do, actually. Coming up on April 15th at Villa Marconi. Learn everything about a reverse mortgage and whether you're in the, where you're at in your life, where does it make sense or does it make sense to sell your property? Does it make sense to maybe do a renovation? And again, reverse mortgages are used for anything because, again, you're tapping into the equity without having to make mortgage payments moving forward. It allows you to continue to stay in your home. So, and to top it all off, you got a wonderful Italian lunch as well. So
I'm only coming for the lunch, Frank, just so you know.
Are you?
So what are the times for the seminar?
Amazing. Yeah, 10 o'clock registration, 10:30 will be on along with Allison Bygrave from Home Equity Bank. And we'll go till about 12 o'clock, maybe 45-minute, hour presentation. Then we'll answer a bunch of questions. And then we'll enjoy a nice lunch all together. So there's still some spots open. You can go to our website or the realestateandmortgageshow.com website, and you can register there.
Awesome. I'm bringing my mom out, and I'm bringing my girlfriend and her mom as well. So
that's awesome.
Awesome. All right, we've got one final listener question to get to this week from Kyle. Kyle says he's considering selling one of his rental condos in downtown Ottawa, and I'll just give you the quick rundown of the situation. The condo is essentially cash neutral. He does not expect it to become much more profitable going forward because of rising condo fees and property taxes. He has pulled out equity of the property multiple times. He's also extended the amortization on the mortgage. He's consistently contributed to RRSPs instead of TFSAs to help reduce the tax burden, and as such, he's never considered to his TFSA, so he believes he may have about $109,000 available in that. The mortgage is about $180K with a potential selling cost of $380 in that range. So it's a two-part question. Would it make sense to sell the condo, pay off the mortgage, cover the selling costs, capital gains, etc., and then invest the rest into his TFSA in a medium risk portfolio for better returns?
So that's a great question for your accountant, also for your financial advisor. I can tell you right now, the condo market is a struggle. It's not going to be an easy sell for sure, because it is a struggle in the condo market. What I personally would do with the money, so I do believe in diversification, okay? I've always said, buy doors, buy doors, buy doors. And then, I was never a huge fan of the stock market and all that stuff. I was always buy doors, buy doors. But one thing that you might want to do is talk to Frank and Mike about second mortgages, about a private into the private mortgages. That's one thing that you might want to do, is invest the money into a MIC. TFSA as well. Like, you might want to talk to your accountant about that. And the problem with the condo market, I don't see it rising too quickly right now. So is it the right time to sell? I don't know. If you're content being
he has decent equity in the property.
He's got decent equity in the property, which would allow you to put some money into a TFSA, but it would also let you put some money into the mix, or into a private mortgages. So there's lots of things you can do with that money. And if it's a stagnant condo market and the rents are stagnant, and you feel like you're going to start being underwater, it might be a time to sell it. And I think one of his other questions was having a tenant in there.
He has a tenant in right now.
Well, selling with a tenant is always tough unless you have a really, really good tenant. It's always really tough. I know they've changed the rules, but even getting out tenants is not an easy task, right? So I know they've changed rules where it's supposed to be an easier task. It hasn't been an easier task, but, I personally, if you're sick of the investment and it's stagnant, I would probably put some money into the MIC with Frank and Mike and take some of the money out and sell your property. But saying that, I'm still a big believer in doors, buying doors, keeping doors. That's how you build generational wealth. But there's other options out there that might be a little bit more passive and safe for you as well.
And if you're going to sell it, you may want to wait for the tenant to vacate before that happens.
If you can get the tenant to vacate,
yeah.
I would strongly recommend you wait till the tenant to vacate, and that's when you can fix up some things and paint and get it looking, really, really nice to get you top dollar for your home.
Absolutely. All right, Frank, birthdays this week?
Yeah, I've got Derek Artichuk, who celebrated his birthday yesterday. So happy birthday to Artie, superstar that he is. So happy birthday to him. Family friends of ours, their daughter's getting married. Alyssa's getting married. Elisa's getting married today. So congratulations to them. And again, happy Easter to all that celebrate Easter. Enjoy the nice long weekend and spend it with family and your loved ones. And that's it.
All right. Our amazing producer, Steven, has a birthday today. Steven?
Yeah, just wanted to wish a happy birthday to my mom. She's celebrating on Monday. Love you, Mom.
Happy birthday, Steven's mom.
Isn't that nice? Listen, I said it last week, but I got some really important people who celebrate their birthday tomorrow. Paul Royce from my team, Angie White, who's in Nashville. We'll call it Smashville the way she is right now.
We can't read those texts.
and Jason Craig, and also my wonderful assistant Jocelyn, who's been with me for years. Her son celebrates her 22nd birthday today as well. So happy birthday, Nick.
A whole slew of birthdays this week.
There we go.
All right. And
you know what? You know what I forgot too, by the way?
Yeah.
One of my best buddies, Rick LeMay, I was at his birthday on the Friday night.
Last week.
And we had the show on Saturday, and I totally blanked his birthday, being at his birthday party Friday night. So, Rick LeMay, happy birthday, my man. And it was a pleasure having some brains in the studio now that Frank's not here. It was a pleasure having my sister Sam in the studio with us all the way from Australia.
Great having you here, Sam. Have a great week, everybody. We'll talk to you again next week.
Have a great week, and please continue to support local businesses and charities, everyone.